Happy Friday. Welcome to another incredible installment of our Resolve It in 30 series, where you bring the questions and we bring the answers. Today, I'm thrilled to be able to have another one of our incredible members, Abel Felix of Assured Partners, talk to us about the importance of employee benefits and the different options that are available.
Yes.
Please remember to mute your cell phones because sometimes they go off in the middle of these things. And if you have questions, put them in the chat box and we'll be monitoring those. And at this point, let me turn it over to Abel and take it away.
Thank you, Kay. Appreciate it. Bienvenida a todos. I want to start by saying thank you to everyone who took time out of their lunch on this beautiful Friday just to learn more about employee benefits. It's an important topic to me. And hopefully you learned some meaningful information here today. And also a big thank you to the Chamber. This is an incredible opportunity, so thank you guys. So my name is Abel or Abel. Today I'll be talking about the importance of employee benefits, the different options and products that are out there for small business owners, but also those larger employers as well. A little background on me. I'm a Dominican American. My parents are from Bonao, República Dominicana. I was born in Hackensack, New Jersey. And for those of you who don't know, it's about a 10 to 15 minute drive to Manhattan. But depending on traffic, that could turn into 30 minutes or an hour. But I've been with Assured Partners since July full time. But I started back in 2019 between interning and working part-time. But all right, we have 30 minutes to go. So Yal, if you could go to the next screen. So I'll be starting with the importance and landscape of employee benefits. Then we'll move on to the different options and products. And then we'll have some time at the end for questions. But why employee benefits should be top of mind for business owners, but also employees. Now, I'll be focusing on the small employers, which are companies with 2 to 50 employees, because that's really who this presentation is for, specifically the retail and restaurants who are having a super hard time attracting employees and finding them. All right, better employee retention. Business owners might know from their competitors as well that hiring is the first step, but keeping them is the second and hardest, in my opinion. Employees are willing to stay, but also apply to jobs if health insurance or some type of benefits are offered, and especially if your competitors aren't offering them at all. Now, regardless of whether your employees like or hate their jobs, they are willing to stay. Some quick facts, according to a report from Gallup and West Health, 1 in 6 US employees remain in jobs that they don't like because of the fear of losing health benefits. And in that same study, they found that workers in households earning less than $48,000 a year are nearly 3 times more likely to stay in an unwanted job for the health benefits than workers living in households earning at least $120,000 per year. Now, in a different study from America's health insurance plans, they showed that 78% of respondents said that health coverage their job provided had an impact on their decision to stay. Now, when it comes to hiring, that same study showed that 75% said the coverage that the company provided had an impact on their decision to accept that job offer. And there are tax breaks for employees and employers. Premiums paid by businesses for employee coverage are 100% tax deductible from the employer. So whether the business owner wants to pay 50% and the employee pays the other 50, 75, 25, or if the employer wants to pay 100% of those contributions, they are tax deductible. And employees, if you are using health insurance through your company, you're paying those premiums with pre-tax dollars. Health savings accounts, HSAs, those are also used with pre-tax dollars for the employee. And if the employer wants to contribute to those health savings accounts, those are tax deductible as well.
Before we move on, just
Yes.
for purposes of clarification, so people understand, when
Sure.
you're talking about paying with pre-tax dollars versus non-pre-tax dollars, break that down easily for people so they understand the benefit of that.
Sure, absolutely. So you look at your paycheck and your net income, the money that you take home after taxes, after everything is taken out of your gross pay, that is your after tax. So if you get health insurance through, let's say, Penny, you're using your after tax dollars to pay for that premium. Now, if you were to pay your premium through your employer, take coverage through your employer, your gross pay. So let's say you make $500 gross pay a week, and your premium for that month might be $20. You're going to take $20 from that 500 and then be taxed on 460 instead of being 480, and now you're lowering your taxable income. So you're kind of saving money. And it's just, instead of being taxed on $500, you're being taxed on $480, and you're using those.
It's a good guy. It's a good guy.
It is a good guy, yeah. And it's the same thing if you're using a health savings account as well. But thank you for pausing me there. That is something that a lot of people kind of gloss over. It is a good guy. That's a nice way to put it. But yeah, so if you have a HSA account through Penny, so if you go on the individual marketplace for Pennsylvania and look at HSAs, you do have to have a high deductible health plan, which just means you are paying more out of pocket than someone with a basic plan. Now, I suggest you do this if you're a younger, healthier individual. Maybe you're not going to the doctor twice a week or twice a month. You're going once a year for your checkup. This is a nice way to save more money on the front end, paying less in premiums. And your HSA is there as a savings account where you can contribute to it, and you could use it to pay your deductible, co-payments, co-insurance, other expenses. But if you have a certain limit, I believe the number is over 3,000, you can use that to invest and actually start making money from your savings account. And if you were to do it through Penny, at the end of the year, when you file your taxes, you would deduct that, whatever amount you put into your HSA, you would deduct that from your taxes. And employers, you get healthier employees. A healthy staff means less sick days, or less unproductive days from those employees that come in not feeling too well. And employees can feel safe knowing that they have coverage just in case something happens. It definitely reduces that stress. Now, employee benefits in today's world. Small group employers, which just means 2 employees to 50 employees, are not, let me repeat, are not required to offer health insurance. They won't face a tax penalty, as some of you already know, but for those 50 employees and up, you are liable to have a penalty per employee if you do not offer health insurance. But again, for small business owners, this is a great way to just attract those top employees and keep them. Now, if you already had a plan in place during COVID, you might have seen a very small increase or a small decrease, or maybe your premium stayed the same. Now, this is because people weren't getting elective surgeries, getting their routine checkups, getting their teeth cleaned, whatever it may be. So claims weren't being incurred. And just a little side note, insurance companies were very happy about this. Now for the upcoming renewal in 2023, I suggest expecting an increase on your insurance premium. But I'll get into more of the untraditional or non-traditional ways of getting health insurance, because you don't need to go through a insurance carrier, and that's what my job is. Now for business owners, some of you may know, you might be pressured by competitors, you might be being pressured by your employees just to offer health insurance or other types of benefits. Your employees might be asking you, but let's be honest, they might be looking at other job offers that offer health insurance from your competitors. Yael, you could go to the next slide, please. Thank you. So some different options available. For small employers, you have the qualified small employer health reimbursement arrangement, which is just where employees can receive an allowance from you, the employer, to purchase their own health care, whether it's through the individual marketplace or just receive a reimbursement for the same amount that they're paying. If you want to go the traditional group health insurance route, you could go to your IBCs, you could go to your big insurance carriers and get an insurance policy there, or you could go on SHOP, the Small Business Health Options Program. Smaller businesses that offer this health insurance via SHOP, they are eligible for tax credits of up to 50% of their portion of employee premium costs. To qualify, your company must have less than 25 full-time equivalent employees who have an average salary of $50,000 or less. Qualifying businesses must also pay at least half of their employees' premium cost. So like I was saying earlier, the 50-50 contribution split, it can't be you pay 40% and the employee pays 60%. It at least has to be 50. For smaller employers, partially self-funding is something that's coming up recently. I would suggest going this route if you have a young, healthy group of employees. And this is just where the employer would pay their own claims as it came up. But usually it's with companies 1,000 employees and up that fully self-insure. Comcast, they pay their claims as it comes in, but they could afford that. Now, if you have any questions on partially self-funding or any type of the options out there for small employers, feel free to reach out to me. Association health plans, these are just for small businesses in the same industry or region, and they can all go in together to purchase a large group coverage plan. So instead of being a small fish in a big pond, you're a big fish in a big pond. But however, please keep in mind that these plans are not protected under the ACA, which means insurers can vary costs because of age, sex, or health. So they are allowed to discriminate. Now you have these captives and consortiums. This may be something that you guys have heard, but captives and consortiums just provide the ability to self-fund your plan while offsetting some risk, and still having some cash flow efficiencies like you would with traditional insurance. This is another way where you can take control of how much you pay for your health insurance. And just the different products out there that are available. Like I said, you don't only have to offer health insurance to offer your employees some sort of benefits. You could offer them retirement planning, 401k, dental, vision, life insurance, disability, critical illness, cancer insurance, long-term care insurance, pet insurance if you have any pets, mental health and wellness. There's the list goes on and on. But
in the about 12 minutes that we have left, one of the
Yes.
things that's really interesting here is I think when people think about employee benefits, they
Yeah.
only think about health insurance. Okay.
Right.
But one of the things that's really interesting here is, especially where we are in our economy, is that there are a number of different products out there. Okay, aside from just health insurance that small business
Absolutely.
employers can offer, or potential employees could potentially request, relative to what it is that they need, and that can be a bargaining chip for both people going both ways.
Right, absolutely. Paid vacation days, the paid time off. I know it's tough in the restaurant industry where you're already short-handed. So you need those employees to work, but it does definitely go a long way. But yeah, when you think of employee benefits, do not only think of health insurance. Again, if you want to have a conversation, I'll leave the door open for you. If you want to come in and just talk, that's fine with me. We don't only have to offer your employees health insurance, but keep in mind, you will get better rates and better discounts if you do combine, let's say, your health, dental, and vision, instead of just offering dental or offering just vision. So
Right.
it's something to keep in mind. Okay, that's all I have for today.
Okay. So I've got a couple extra questions. Okay.
Yeah, sure thing.
And so let's have a quick conversation. First of all, before I go any further, about how do I get in touch with you? What do I do?
Absolutely. So my number, call me. You can call me anytime, text me if you're more comfortable texting me. That's my direct office line. But I
What's the
can
number
give you,
about? Tell everybody what the number is.
yes, 856-996-1826. And my direct cell phone number, the cell phone that wakes me up and I go to sleep with, is 570-436-4620. And you
And
can
ladies and
call me.
gentlemen who are listening, if you're going to text or call, if you're going to text a bell, my recommendation is to just say that you're from the GPHCC. Okay, so he will respond. There you go.
No prank calls. No prank
Yeah,
calls.
no prank calls. And so if we go back, Jael, if you could just take us back one slide, if that's possible, and if not, I've got it in my head here. When we talk about employee benefits, and we talk about the options that are out there, both for employers and for employees. In your experience, Belle, what have you noticed that is the most current trend, okay, for both employers and employees? And we've got about 5 minutes.
Yeah, I think the current trend, specifically for employers, is that they are not getting fed up, but they're starting to learn about other options out there other than going the traditional route through an insurance carrier. We have these captives and consortiums. We have level funding through insurance carriers where for level funding, let's quickly high level overview. Aetna has a level funding arrangement, and you set aside a certain amount of money that you pay for the year. Let's just say you and Aetna agree that, you expect to have $100,000 in claims. You would pay Aetna that monthly premium of, what's the number? I wasn't really good at math.
Make it up. It's okay. Just use an example.
$8,300
There you
a
go.
month. So you're gonna be paying that monthly. Now, if you come below that $100,000 at the end of the year, where Aetna does their audit and everything, you could get some money back. I mean, it's not going to be January 2nd. You see a check in the mail, but after they do their audits and everything, you could get a refund. But now, if you go over those $100,000, you're going to be on the hook for that money that you incurred
Right.
in claims. But there's just different options out there other than just paying your set premium that the insurance gives you every month. And again, that's why I'm here to have this conversation. If it makes sense to go through IBC and have your traditional health insurance through them, I'm just here as a consultant. I won't lead you any which way, and whatever you feel comfortable with, because at the end of the day, as long as the business and their cash flow that's what comes first. And really, if your cash flow is, fluctuates a lot, I would suggest going with the traditional health insurance route, where you're paying a set amount every month and it doesn't change, unless at the end of the year.
But you're going to be there, to be able to guide and direct people, and that.
Absolutely.
And so before we say, Abel Felix from Assured Partners, before we say
Yes.
goodbye on this very important topic of employee benefits, Shael read my mind. Tell me one more time how I get in touch with you.
If you want to reach me through email, my email is abel.felix, FELIX, at Assured, ASSURED, Partners, PARTNERS.com. And again, my phone number is 570-436-4620.
Abel, go ahead. I'm sorry.
Yeah, and please, if you're not comfortable speaking English, I speak Spanish as well. So please reach out to me, text me, English, Spanish. I speak a little bit of French. So whatever it is, I'm just here to help and guide you guys.
I want to, Abel, thank you so much. And it's important. It's really members like you that really help the community. Somebody could be out there just not sure what to do or how to do it, and just having a qualified individual to talk to that has the credibility that you do is really critically important for the community. So I want to thank you very much, and thank you all for joining us today. Again, we want to thank our primary sponsor, La Mega Radio. They are always available at 215-426-1900 to talk to any of our members and put together little packages for advertising for as little as $350 a week. So don't forget to call them as well. The rest of America, thank you for your participation. Don't forget to check our website, as they say, early and often, because we have a lot of things that are always happening on there. We'd love to hear from you. If there's anything we can do, please reach out. And don't forget, membership matters at the Greater Philadelphia Hispanic Chamber of Commerce. Have a great weekend, everybody. And thanks again, Abel.